What's good? What's good, everybody? It's your boy. Um, TBT, aka the Brainless Trader. You already know what it is. And we are here with another one. We're here with another one. Today we're gonna go over how I was able to grab 100 pips in the market on demo. Um, and just kind of go over like the technicals and how exactly that added up. Man, this picture's a little bit blurry. Let's go to the trading hub. The work camera be better, no cap. All right. So what we finna do is we finna share the screen and talk through the charts. I was able to trade two different pairs yesterday: GBPUSD and also GJ, and just was able to grab a little bit out of the market. Lot sizes were smaller, just practicing on my entries and my timing. So I talked to y'all yesterday about how we were focused on looking at the DXY as majorly bearish, um, and then from there focusing on looking at foreign currency as majorly bullish. But in yesterday's trade, what I was able to do was kind of capitalize on that movement that was not majorly bullish for the DXY. Um, and so we actually caught like a counter trend move counter to what I was wanting to see, but still was able to capitalize on it. So let me just zoom in here to take a look at basically yesterday, Tuesday, this Monday, and then Tuesday, we kind of entered up into this order block here. You can see that there's the order block and fair value gap prices kind of gone past it once and then again, but did not go across consequential encroachment. Now, even though it didn't go across consequential encroachment, what it did do, let me find out why my light is flickering. Let's choose a different light and go a little bit lower. Um, what it did do was at the height of yesterday, it was on its way up. And so what I traded, it was about, I'm not sure what exact time it was. Let's look at the GU trade. Let's see if we got our stuff marked up here. Do we have our executions? No. Need that. Thank you. Now, when I traded yesterday, I traded this block. If we're looking at the daily, there was a little bit of sell side liquidity right here, and then more here, here, and majorly here. Obviously, you're not thinking about getting a run down to in this direction, but when you're looking at a move that can potentially go against your daily bias or your overall seasonal bias, you definitely want to be looking at targets that are a lot shorter. So that's what I looked at yesterday, combining a few of ICT strategies, which we shall go over now. So if we back up in the screen just a little bit, hopefully you will be able to see the things that I've marked up on the chart. So this is today. We'll go over that after we go over these trades. Um, let's see what we got here. So we might have to back up again, honestly. Um, so overall, right, you got the overall movement that has already gone up. You've got the overall movement that's already gone up here, kind of attacked the buy side yesterday, Monday. What is this? Sunday, between Friday and Monday. But then what we see is we begin to break structure to the downside just a little bit. And as you see, I got my sell side liquidity marked out here is what I, potentially want to attack, or potentially want to see price attack. But since we don't have like the genuine breaker, you can look towards the mitigation block. Now, since we're not having like a major breaking structure, because this is the structure that you would really want to see if you're thinking about like downside moves, like continued downside moves. Um, looking at that mitigation block, you can use it for shorter targets. So what we have is my red bands here are just the Asian range, and the highlighted or the bolded bands here are simply the Asian range from, I think, the beginning of the Asian range to 12 a.m. And the reason why I do that is because I want to understand where the 12 a.m. open is, right? So that's the indicator, you could say. It's not really a real indicator. It's just giving me a little bit of view of, the time frame of the Asian range so that I can time up the 12 a.m. open, right? So that's what these are. This is something else. Maybe I'll review this in another video, but essentially, it just shows you, when the different when the U.S. and the London session crossed over, and ICT talks about using PD arrays that are within this range, right? Because they're going to be a little bit more effective. And naturally, you can see that, mitigation block within the range. You got order blocks, you got fair value gaps, all within the range of, basically the kill zones, basically the sessions, the London or the uh, American, US dollar, whatever session, um, New York session, you know. So I don't always have this on because I kind of know, when that is, but naturally the PD arrays that you should be using should be within those ranges. Um, so just wanted to explain that really quickly. But anyways, you got high, low, lower high. Lowest down close candle would be a mitigation block. Then what activates that mitigation block is your fair value gap to the right of that mitigation block, right? So now we have a solid PD array. And now yesterday we're looking within the framework of what is price going to do with this fair value gap? Is it going to go above it? Is it going to stay below it? Right? If it stays below it, you see it attempted to go above it twice, didn't reach as far as it wanted to, stay within, probably consequential encroachment of that fair value gap. And then that's where you have us being able to look at attacking it on the smaller time frames after that, right? So let's zoom into the smaller time frames. Let's look at the 15-minute chart and just look at the execution itself. Um, so as you've seen, I already showed you a higher time frame, our mitigation block and fair value gap that we're looking at to, show us should we even be getting into a trade, right? Now, understanding that this is my sell side liquidity that I mentioned earlier, what we can now begin to look at is, let me get my please pray over here a little bit better. What we can now begin to look at is what opportunities there are for continue moving to the downside, looking at a short term target, right? Um, let's bring this down. So this area is the run on liquidity, right? You've got essentially there's liquidity here, small run on liquidity, basically entering up into what's an order block here. And if you look across, price basically touches it. And if you look all the way over here, price literally is perfect on this order block. Touches with the wick of the previous high, and then this high that is the next run of liquidity. It touches it perfectly. Bodies are closing right there on the order block, right? So you got another order block fair value gap. This is the ICT 2022 model. It's available for free on YouTube, right? So with that, you got the order block and the fair value gap over here being respected. Then what do you have? You have a high, low, higher high breaker, right? You got a nice 15-minute breaker. And then this is where the 12 a.m. open comes in, right? Because right here is the 12 a.m. open. This is essentially, ICT likes to look at 12 a.m. to 12 a.m. as the days, for you paying attention to price or not. And the 12 a.m. open is a good indicator of essentially using ICT's Asian range strategy, where he wants you to take the 12 a.m. open if you're looking bearish for the day, then you technically want to have entries above the 12 a.m. open, right? So for me, it doesn't always time out that way. Honestly, I didn't even see this uh, order block and fair value gap while I was trading it. All I was looking at was that we had a breaker here, and then we had a fair value gap that activated that breaker, right? So now at the time, which was what I didn't trade it until sometime around here. Where are my executions at, man? Where are my executions at? It says that it's on, but it's not. So I don't see my arrows. It's quite weird. Can't even tell y'all where I got in at. What's this mean? Oh, you know what I might have to do? I have to activate the actual demo so y'all can see it. Connect, please. Thank you. Let's see if we can connect the demo paper trading account so you can see the executions. Kind of slow. I ain't gonna click it again. While we're waiting for that, we can just continue to explain what I did in hope that this thing will show up on the screen. So from there, what happened was you're looking at another. You're looking at the breaker, the respect to the breaker, correct? And then once you have this respect to the breaker, this is 4 a.m. This is kind of the end of the ICT London range. Um, so I'm not really keen on that because I'm not always up at this time, right? And a lot of times this is the end of, what was this move, right? If I was going to get in during the Asian range, I would have wanted, sorry, the London session, but the end of the Asian range, right? So the London session would be 2 a.m. to 5 a.m. kill zone at least. Um, so I would be wanting to operate within that framework, and I could have, knowing that if I was paying attention to that order block and fair value got to the left there, um, this. But seeing that I entered only after, I think I entered somewhere around here. Once I get these executions up on the screen, then we can talk through that. So let's go to the 5. Looking at the 5, looking at the 5, looking at the 5, looking at the 5. So you'll see a theme here, right? We talk about order block, fair value gap a lot. High, low, higher, high, breaker, right? On the 15-minute chart, there's one candle. It's 3 consecutive here, but there's one candle on the 15. Fair value gap that activates the breaker. Order block, fair value gap, price trading up into that order block and fair value gap, right? I believe my entry was like somewhere down here. I believe, like right in here. So ideal entry, that's why I put this here. This is your ideal entry right here. Honestly, your ideal entry really is this. Because if you're looking, let's zoom in. If you're looking, then price not only gives you order block fair value gap here, but it gives you order block fair value gap here, and price comes up into it, right? So this right here, this would be your area for ideal entry. And then that would have given you the ability to at least, by my measurements, attack, about 20-ish pips to this low. And if price gave you a little bit more, that's a total of 40 pips within, a range we've already seen on the daily that's been just a little bit difficult to navigate, right? So that ultimate sell side liquidity that I was looking at is just an old low back here. If we can find it. There you go. Oh, well, that's one of them. But I wanted to get this. I thought it was low hanging fruit enough. Probably could have settled for this, but this was what I wanted. And so since I entered into the trade so much later than the ideal entry, this is where my 25 pip move came from. It was a 5 ladder. And so I was able to make about it was a little bit less than 25 pips, maybe like 20 pips. So I was able to make about 800 cash, uh, fake money. And this thing is just not connecting, bro. Like, what's good with y'all? I'm finna refresh this. So yeah, um, that is essentially the way that I like to look at my trades. I like to use the breaker because it's just easy to identify, and when it is clear to identify it and price respects it and respects the order blocks and fair value gaps that surround it, it's a lot easier to make decisions for me personally. They don't always, um, they don't always I'm not gonna say they don't always work. I think the main thing for me is like understanding how to choose price targets that are like low hanging fruit. Like this price target was a modest target. Had I been choosing a target that was much lower, then I might not have won that trade, right? So I think the major thing in being successful trading, there we go with the executions. Um, the most important thing for me right now in being successful with my trading is simply to understand how to be humble. Like, if I can just continue to improve, right? As you see where I entered, if we go on a 5 minute, it'll be a little bit closer to my entry. Do, 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 do. All right, yeah. So I entered really late in the game, really late in the game. That's why I said like 20 to 25 pips. And I entered once here and another, so 2.5 here and then 2.5 lots here. Um, so I wanted to get out here, and then price. You know what? That was the issue, and I had to learn that here. I think is I mean I set my target for here, um, but I don't know. It didn't give me it didn't give me what I wanted when it went down the first time. So when I came back, I wasn't really monitoring these. Obviously, I'm demo trading it, so I'm taking it with the idea that if this was a real trade, that I would be able to kind of mitigate whatever losses that I was as I was checking back and forth at work. But also taking it with the idea that the lot sizes aren't too high to do any sort of damage to my account. And I'm looking at trading an account that's got about $30,000, had about 30 has $38,000 in it, and just because I'm preparing for something that's gonna basically give me about $8,000 worth of leeway to trade, um, so I'm trying to model it in that I don't want to go below 30,000 basically, and I want to just continue to bring that balance up, right? So um, that is the idea behind this trade, looking at breakers, fair value gaps, and just continue to do the order block fair value gap game until you get to where you want to with that ideal entry within the kill zone. And then it's a similar entry within GBP JPY. Let's go over that real quick. We look at the hourly. If we just go, let's go to the daily. Um, we can understand that with GBP JPY, there is. Let me see here. Where we at? All right. I'm about to say where we at, cause all right. So with GBP JPY, obviously we made strong moves to the upside recently. Right here. Thank you. And so if I move this out of the way, let me go into the lower time frames. Essentially, what I was looking at here is we've obviously breached liquidity, and I explained to y'all in my market review on Monday that if we did breach liquidity, what we would be looking at from there on out would be a potential return into that area um, before price continues to go up, right? So we want to understand that there will be opportunities to potentially look into um, trades that could go to the sell side at least for a little bit probably up until we get around this area, and then we want to see if price is going to actually blow through this, or if we're going to respect this and continue to the upside towards this fair value gap. So if we zoom into the hour chart, then we can see what this trade looked like. Do 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 do. All right. So as you can see, you got the signature. You got another breaker zone, right? Um, and what's nice about this was we're still using the 12 a.m. open. If you were just to use the 12 a.m. open concept, you'd have gotten yourself a nice entry as well. So let's go over that. Let's zoom it in a little bit. I know it'd be a little bit tough to see sometimes. All right. So hopefully y'all can see this pretty clearly. So you got a high, low. You could say high, low, higher, high. I did high, low because likely price started here and then finished here, right? So high, low, higher, high. This just so happens to be the same candle for the breaker range. And then that's our general breaker, right? But then you got the 12 a.m. open here. 12 a.m. open, ICT talks about if you're looking at the Asian range, if you're bearish, price goes above the 12 a.m. open, you can have entries here. And price breached liquidity. So this could have been kind of like a turtle soup type of entry here, where price breaches liquidity and you just kind of enter based off of that PD array. And so I personally am just not a fan of doing that with my money because it doesn't always pan out that way, but a lot of times it does. I mean, cause that's kind of what I'm trying to get to, is being able to maybe put like a 1 or 2 lot here on a GBP JPY, right, and just let it run for the range of the day, and you possibly get a couple $1,000s out of that with low risk. You might get $1,000 or so out of it with minimal $500 risk, and that's pretty nice for an account size of what I would be trading. So not only was that a possible entry, but then if you wait for those confirmations, you go down to the lower time frames, you can get an even better entry, kind of within that breaker zone or just below it, right? So as you see, my entry was just below the breaker zone. Oh, that's what's going on. I'm like, why is my chart so small? My bad, y'all. So we got the breaker area, right? And we zoom out, high, low, higher, high, lowest down close candles, breaker on the higher time frames is 1 candle. Your ideal entry would have been within the breaker zone. That's why this was over here at first. So you can see there's, what do I say here? Second, okay, so you got the order block here that's within the breaker zone. Price going up into the order block. There's a small fair value gap here, but not enough to really be paying attention to. Price obviously rose past it, but I'm looking for GBP JPY. I look a lot at the fair value gap still, but order blocks as well. And just really the respect of those. If there's no respect, like if this were to trade past this order block and past this breaker, then you don't have a trade, right? But since it stayed lower than that, and the respect is still there, then you got something. You got something. And so that's why you got price trading back up into that breaker area twice after it's broken it and respecting this order block. You can look for trades shortly after, which is why I just entered a 1 lot here just to see, hey, how does this proof of concept work? And I took a modest for GBP JPY, honestly, but in any other pair, this would be like a large trade. If I were to take a larger lot size, right? But the reason that I chose this liquidity target is I think on the smaller time frame, let's go to the 30-minute. I think there is a little level of liquidity here. There you go. So there's just a little low here. Just it's right above the fair value gap, and I like to, the same way that I like to look at my trades, as choosing targets that choosing PD arrays to enter that have a combination of a PD array and a fair value gap. I think looking at targets that have a combination of a recent low, sell side liquidity and a fair value gap, those are strong targets, right? Because ICT likes to talk about how price could either attack. Good grief, man, y'all hitting me with these. They, I used to have the pro, and then I stopped the pro after my last excursion with the markets in the fall. Um, because I wasn't trading actively afterwards. I was just studying. And then I think they just want me to come back to pro. They be throwing these ads in my videos, boy. But anyways, I think that ICT wants to look at, I think that it would be a good idea to look at targets that have a combination of sell side liquidity and a PD array. Why? Because that makes that the magnet that attracts price to it a little bit stronger, right? So that's something that I've been kind of wrestling with, is just understanding one, we want low hanging fruit, right? Honestly, I could have probably just targeted this area, these lows, or this. Um, but if you're looking at where I actually entered, my thoughts were that, hey, in the scheme of things, we've already ran up a lot and we haven't actually made that repricing move to the downside. So let's see if we can capitalize on it. You got minimal 30 pip stop loss. It's not terrible. I think that's why with GJ I take a little bit smaller lot sizes, like 1, 2, you know, no higher than 5, right? For the account size that I'll be trading. But with that, even if I were to take a 2 here, I ended up getting about what, 70, 80 pips out of this move, right? On GJ. So that's the beauty of GJ, is that I don't have to risk as much to get a nice reward, because it's going to probably go further than like a typical GU if price is in the proper place to do so, right? Um, so that's one of those things that with experience and just taking your time in the market, you will learn, the different levels of low hanging fruit, right, within different pairs. Because low hanging fruit in GJ is 50 to 80 pips or 100 potentially, whereas low hanging fruit in GU is really more like 20 to 30, 40 pips, and that's a really nice move. Like 20 to 30 pips, it's a nice move. You get 50 to 60, 70, 80 in GJ in GU. That's like that's something super nice. But you're not going to see that all that often in 1 or 2 candles, right? At least until price breaks out of this consolidation area that we in. So I'm still majorly bearish on GJ and GU, just because the DXY is likely still moving downward. But in that time, you're still gonna be patient and wait for repricing in both. Now, G gold, not GU, but gold. Um, I didn't like any trades here. It's just been in this range. I just don't like it. This just we back and forth, back and forth, back and forth. We're still bullish on this, obviously, because of the overall, like, if you're looking at the 4 hour and the fact that we just moved here. You can even look at a breaker setup here. If I were to have traded this, you're looking at a low, high, lower, low, highest close down, highest up close candle is the breaker candle, right? And then price respects it and continues to run up, right? But it's kind of like, yeah, I don't know that I really want to take that, seeing that price is doing this. So that's why you observe. You don't have to take a trade in every um market, but still majorly bearish in this as well. Majorly bullish in this as well. As long as the DXY continues to provide me with solid sell side movement. We talked about it earlier, just looking at how there's this large OB area here. It's a daily order block. We're looking at the 4 hours, so it's a little bit off to the candles, but price has essentially ran out liquidity here, and now it's getting ready to make its move down, right? You got a high, low, higher, high. You potentially have a breaker here with these 2 candles, and so I'm not 100%, but if I had to tell somebody which way to take trades in the DXY, then I would be looking for the downside, because there's just some really nice liquidity here that hasn't been attacked, and it's coupled with a fair value gap. Um, and just with the, like we said, geopolitical situation, a lot of things are pointing towards DXY down. So right, so that's where your bias is. Doesn't mean you can't take trades opposite of that if price sets up correctly, like on a day where price is going up, like we just kind of went over, because you see it still provides pretty nice moves in foreign currency. But you got to just be careful about picking your targets, and just understand, no matter what, start taking low hanging fruit type of trades. Start taking trades that, one or two times a week, you're just looking at the trades that are obvious, they're easy, the PDA rates are setting up perfectly, everything is nice. There's not too much heavy like FOMC news like there is today on a Wednesday, right? Um, and so you have an opportunity to take advantage of some of those moves. Not to say that you can't take advantage of moves today if they set up, because they may, but it'll be a little bit less volatile. So hopefully, today we're just focusing on observing. I'm working on my discipline and not trading on a day that I know it's a lot going on. I got a lot going on at work today too. So just kind of focusing on letting the prices do what they do, and then coming back on Thursday and looking at what we got. Right. So with that said, that's all I got for today. I'm gonna go ahead and end the stream. Thank y'all for checking me out, watching. We'll catch y'all on the next one. Much love. All right.